TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good, Lewis. By the way, we're going to have Shane Smolian, the Wolf Trader, as our guest at the half hour. He's got a special presentation on what he sees happening in the markets today. And then also later this week, I'm hoping to have Mark Leibowitz from Volume Reversals. He's an old friend from many years ago. Folks, this was a big day anniversary-wise here in Tucson, Arizona. First of all, it was Mark Douglas's birthday, the 27th of September, and we were going to go up to Scottsdale for his 60th birthday for a surprise birthday party. But at 6 o'clock in the morning, Byron Tucker, who lived in Scottsdale, called me and told me that his house was burning down and could I get up there. So it took me about 2 hours to get to his house. And holy cow, I couldn't believe it. But the house was totally destroyed. I mean, everything was destroyed except Byron's library. We still don't know why that happened. The firemen came in and put tarps over all the books. There was slight water damage to just a few, but over hundreds of books, none of them were damaged. And he was able to rebuild the house brand new from the ground up. And he just sold it last week. And he had been in that house, one of his houses, for 20 years. And so he's out of Arizona. So sad to see him go. Okay, now let's move on to something else here. I posted the charts for the German DAX. We've had the election over there. I don't know what it means. I don't think they do either. But you can still see short term, it's in a downtrend. That long term weekly, I think, is making a major top like we see in some of these others. Now, let's take a look now here at the FTSE. We want to get up here. And this is just the 4 hour first, and then we'll do the other one later. But here's the FTSE again. You can see that this is a head and shoulders pattern, folks, on this 4 hour FTSE chart. And it's also a 135 pattern, as you can see. So that's lined up. And let's get up to the last one here, which is the long-term FTSE weekly. And this is certainly a negative chart because it's a weaker than overall market stocks. You can see the 135 pattern again on the weekly. You can see it on the 4 hour. So that makes it necessary. Now let's get back to the market here because something pretty exciting happened over the weekend. That is this aspect. Well, actually, it happened on Friday. I want to get this up here so you folks can take a look at it. This is from the Astro Cycles book. And all I'm going to show you is what we're seeing here on the solar eclipse back in 1987. The key thing is that we had a Venus trine Uranus there. That's the Fibonacci cycle because it is 255 days into a 365 days, 0.618 of the year. Then you see the big drop down. Shane is thinking we might get something like this. I'm not sure. And in fact, with the action that we had on Sunday night and the market started higher, I immediately sent out a video saying that this market was acting still like it wanted to go higher, so be very, very careful. But we predicted the high to be around 44.69 in the E-mini S&P. It got to 44.71. Here's the chart. I've lost the chart of the S&P, unfortunately, but I still have the chart of the NASDAQ that I put up. Now, the NASDAQ dropped 250 handles, folks. It dropped off the bottom of the page. So that is negative action. But you've got to be really careful here. You can stop and think, but you got the S&P down 12, the NASDAQ down 150, and the Dow up 250 points. I mean, you got to realize that each one of these indexes is a little different. And because the S&P is different than the Dow Jones, the Dow Jones only has 30 stocks and they're price weighted. So you've got to be really careful doing these. You've got to be really careful in all these markets these days because we live in an interesting time. Marshall was able to point out here in the room today that we have Mercury going retrograde. So that's an important thing to pay attention to. We've got one other market, folks, that has exploded to the upside. We've been watching this to what, of course, we talked about the buy that it had down at the 382 at at 470. And now you can see here that we've gotten all the way up to, we're almost up to the 1.27 expansion at 590. We hit 562, making new highs today. This is due to what's going on in the UK. They are having tremendous difficulty with anything related to energy, whether it's oil, gas, doesn't make any difference. They're having a great deal of trouble. They're having trouble with getting foods delivered, folks. There's some supermarkets, they only have 1/3 of the shelves are filled. And secondary to that is that they're not able to get certain products like meat and dairy products, because they just don't have the truck drivers to drive them in. At least that's what they say, but I don't know. I talk to John over in the UK quite a bit, every day, and he tells me that right now his supermarket is very sparsely, but you can still get the things you need to survive. But anyway, that's what we're looking at here. So far, I haven't seen any of that. The other thing that I'm watching is to see if there's any really big outbreaks of the COVID, because of the fact that we're seeing all these football games every weekend where you've got 60, 70, 80,000 people in the fans with no masks and certainly no social distancing. And there should be huge increases in hospitalizations and other stuff. So maybe that we are immunizing ourselves against this, but hopefully this will get over and we'll get back to normal, but I don't think we're going to get back to normal. Normal is, no, the NFL would not, Bill is saying, would the NFL report this? No, I think the hospitals is what I'm watching to see if there's any, big things in the hospital. I played in a little poker tournament yesterday here in Tucson, and, it's a small Indian casino, but we have a good crowd. And there was, and they're all these guys are, they're not as old as I am, but pretty close. Some of them a little older, but they nobody wore a mask and no one's died or anything like that. So we'll see. That's it. I don't know what to say about it, but we'll have to wait and see. But this is certainly in the news, along with the other stuff that's going on in the world with the German election and all the other things. But let's get back to the things that we like to see, and that is the market. Okay, I had some really good, interesting trade ideas last night. Selling that S&P up there worked pretty good. We had one other one that we really liked, and that was this crude oil trade. And we had it set up just absolutely crude oil and the heating oil right up at that 1.618. And what happened was it stayed there for a little bit, backed off a little bit. And anyway, we were risking only 60 pips on this. And of course, we did get stopped out of that one. So that one didn't work. We also had an order in to sell the gold at 1761, and I believe we missed it by 10 cents, getting filled at the exact 61% retracement in the gold market, and it broke $1,000. Folks, if you're going to trade gold, you absolutely, positively have to look at how the U.S. dollar is doing, because if that U.S. dollar is strong, gold is going to be weak. If the U.S. dollar is weak, gold is going to be strong. Take a look at the chart and the newsletter this week and trade what you see, and you'll see that it's just setting up here for 5 days, not moving at a very high level. That is not bearish action, folks. That means I think we're going lower in the euro, and that's what I think. So we'll be right back. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. And regarding the crude oil, folks, I still haven't given up on the short side because, it went above my sell point, but it's come back now. And so what I'm going, that's such a big 3-drive pattern up there in the crude oil. Just check it out. Well, I think we can do this pretty easily here in the, I think we can. Let's just get up here and take a look at it here. Yes, we can. You'll be able to see it's a really nice 3-drive up here. So all I'm going to do now is to try to find another place to do it. What I usually do is I'll go down to a 15-minute chart and get an angle on it there that I'll be able to see where the entry would be. Now, we had an email this morning from Jeff in Pennsylvania saying he was sorry that the crude oil trade didn't work. Hey, don't ever be sorry that it didn't work or happy that it did work, folks. That doesn't enter into it. It's just a trade. Doesn't mean anything. Honest to goodness, it really doesn't. So don't ever feel sorry for me or anybody else that has a losing trade, because you're going to have those just as significantly as we are with this is right here. Mr. Z, oil could rally above en route to 80. I don't believe so, Mr. Z, and I'll tell you why. That's a beautiful 3-drive pattern. It's going a little higher. It's now dropped just about $1 a barrel from the high, so I still think there's a possibility for it. But I'm a little risk averse at the age I'm in now. Of course, I've been at that reverse age for quite a while. But I'm just waiting to find a really low risk entry point in. I thought I had one last night. It looked like it was setting up perfectly, and then when you miss the gold one, that makes you a little bit wonder. But you got the S&P. That one was okay. And that's mainly here and there. Now, let's take a look. I've got a couple of charts here to show you the long-term status of where we are in some of these things on a long-term. This is why, one of the reasons why I am so very bearish. You'll notice here, this comes from Real Investments, and it basically shows the stock market from way back in 1951. And you'll notice the move that we have here. Now, you'll notice that bottom we had in 1974. That's the one that was my awakening. That's when I gave most of my trading capital back in October of that year. Then I didn't trade again until mid-1975. And then I was able to, recoup some of it back. But you'll see the crash of '87. What happened. You can see the .com bubble. What happened there in 2000, and you can see where we are now, folks. This is true. We're in an everything type bubble, but where is the top going to be, and how is it going to be rectified? We see the problems that are happening in China right now. If you think China's having problems, folks, just look in the mirror. We're having the same kind of problems. The Fed has been pumping money into this thing to keep it up. And that's the wrong thing to do. Trust me, boys and girls, I didn't fall off the Apple truck yesterday. I was able to walk behind the truck and get another ride a little bit later. But let me tell you something. Do you remember when they tried to feed us the stuff about negative interest rates? Sometimes you got to just step back and think about it and, use a little bit of common sense, because who in the world, these people that are buying junk bonds with negative rates, they're actually buying something that has a negative rate, that has a rating that is called junk, Junk. How absurd can that be? So, if they don't have any skin in the game, I don't trust them. That's the bottom line. Let's take a look here. I got this chart from the Elliott Wave people, but I really like it, and I wanted to show it to you because it tells you where we are here in a long-term things, looking at history. If we look at the stock market, going back into the early 1900s, that's when our country was formed, and we're supposed to be, exploding. But look at this. This thing was look, hold on one second here. You can see we had a high in the stock market in 1906. That was when we had the earthquake. The earthquake broke the market. That was what did it, the San Francisco earthquake. We lost about 40% of San Francisco. You can see the ABCD pattern. It took 15 years, folks, for that market to bottom in 1921. But from 1921 to 1929, 8 years, it was all she wrote to the upside, and then we had the big depression, and now where we are with all these things, I'm a little afraid of, what might happen to some of these things. So keep your eye on the ball here, folks. It's not about making money. It's about not losing it, and I'm afraid some people in 401ks and other things are going to be, sadly, rewarded here. Well, that's not the good terminology, but the one thing, I have several friends that I call and I tell them, look, be careful in here. They usually believe me, but this time they're saying, nope, this time it's going up forever. That's number one red flag for me. So I would be very, very cautious here, folks, with these things, because when it does turn down, and it's not a question of if, it's a question of when, because Newton said, what goes up must come down. Hold on one second here. We've got to get up here and get this thing going. Hold on. I'm sorry, folks. I just interrupted a call here that someone was trying to reach me on. And Dees Corn. Mr. Z's talking about the Dees Corn. Yes, sir. We do have a nice rally going. I posted the soybean. I believe, I posted the soybean because it's also had a really nice bottom. We had a beautiful 3-drive bottom in the Dees meal. We tried it once, it didn't work. The second time, I forgot to put the order in because I was so concerned about the gold, the crude oil, and the S&P. I missed the grain move, but that's neither here nor there. But it has moved pretty good. Let's take a look here at this Christmas corn, so we'll be able to see it without too much trouble here. If I can get the chart up, and I think I will be able to. Well, I think I will be able to. There we are, Mr. Z. Yes, we're having a pretty good rally. Yeah, it's a nice rally today. This is really good. Yeah, this is doing pretty good. Hold on a second here. You'll be able to see it here. It's acting pretty good. It's not spectacular, but, you can see you got a beautiful ABCD pattern that's going to extend up to 562. That's not going to be an easy one to miss, but there's your AB. I'll post this in the room as soon as I draw it, folks. So give me a second here. And then at the break here, we're going to have the Wolf Trader man on himself here. And here, I'll put up the chart. Now you see what the objective is on this corn. It's up around another 20 cents higher, around 560. Yeah, right around 560 in the corn. We're trading at 538 right now in December corn. So, but this market, remember, folks, this market topped a long time ago, way back in early April, around April 1st, had these huge swings. And what we're looking for now is see how much of a rally we get as we come into harvest. But pretty much, folks, this stuff is getting ready to be harvested. We're not going to lose much in beans. We're not going to lose much in corn. We're also not going to gain much, but we're not going to lose much in those. So those are the key ones to pay attention to. Focusing on the stock market here, folks, because I think that's the place where most people could lose a great deal of their money. And I'm trying to get you folks to just be careful in here and lighten up if you've got 401ks and stuff like that, because this market is not acting very bullish. We'll be right back, folks.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. We have the Wolf Trader, ShaneSmolian.com, as our guest today. Shane, how are you?
Larry, how are you?
I am good. Now, you have a special presentation you'd like to show us today. Is that correct?
Sure. I'd like to share this with you.
Why don't you go ahead now, folks? Just as a little background, Shane and I have been talking about this for the last 6 or 7 days, is because of the similarities to what we had in 1987. This is what we were talking about. This is more advanced than I've been looking at. So why don't you tell the folks what you're looking at, Shane?
Sure. Well, a couple of weeks ago, I did a presentation on the S&P, talking about is the S&P in trouble, right, when it was topping. And last weekend, I did a presentation on stock market crash signatures. These are patterns that tend to show up near stock market crashes. And I've kind of ranked these here on a top 6 list. So what I'm going to do is I'm going to go through these, and then I'm going to go through some of these scenarios. And there's a lot of similarities in terms of what's going on right now. So the first thing that I like to look for is the Fed internals falling. This is something that has occurred since 2009, basically, since quantitative easing began. So this is a new phenomenon. This didn't show up in 87, 1929, 2008, because the Fed wasn't as powerful as they are now. So this is a whole new factor that we look at. The second one here is the Planetary Speed Index, which does affect all markets at all times, and this is always present in market crashes going back to 1929, 1987, in the 90s, 2000, 2008, 2010 flash crash. All of this is always falling when that happens. The third one is a Mercury station. Now, Mercury station in of itself is relatively harmless. It happens 4 times a year. Markets can tend to stagnate around this. But when you get the Mercury station with a falling Planetary Speed Index, you can get a situation where you can get a market that can tend to dislocate. Now, it doesn't always happen, but when you get market crashes, these two tend to show up together. Now, this fourth one is the Venus-Uranus hard aspect. And Larry, I believe you worked with Dr. Ruth Miller on this one, correct?
Sure did. That was the reason I got interested in astrology, because of that aspect.
Okay, so this aspect, strangely enough, shows up right around market crashes. Now, most of the time it's in the 4th harmonic, which is a conjunction, a square, front square, opposition, back square. But the 8th harmonic also tends to show up too. It's got to be in a hard aspect, and it usually tends to show up right on these. And then I have a 5th one that I'm working on now, which is a Planetary Acceleration Index. That goes with the Planetary Speed Index, and this falls into a topic of physics called simple harmonic motion, which describes the motion of an object with a linear restoring force to the equilibrium point. This isn't exactly simple harmonic motion, but it follows similar tenets of that. Bonus, if you have a black swan event like COVID, that's a bonus for a market crash. Obviously, global events, black swans can tend to move markets. And then negative transits is a bonus. It's not a requirement, but it's definitely a bonus.
Hey, Shane.
Yes.
Shane, you can skip that part about the physics stuff, because everybody at TFNN here on our show here is very, very adept at quantum physics. I've been teaching that over the past 14 years, so I think we're okay there.
All right. Well, I'll tone it down.
Go ahead.
So this is the Fed internals, and you can see here, I talk about this many times on your show, but you can see that when the Fed internals fall, the market tends to fall. A lot of times there's a lag. This is 2011 here. In this case, there was a one month lag before the market actually turned. But eventually the market does turn when these Fed internals turn. Sometimes the lag is a little bigger. Later in that year, in 2012, it took 1.5 months when the Fed finally turns this down before you start to get a down move in the markets, before you finally get your down move here. But this is a really important factor because in this modern era that we're in, the Fed is so involved with the markets that you have to pay attention to it. This is a broader view of what the Fed does in terms of the Fed internals going back all the way to this is 2010. And you can see that as the Fed flows here, as the Fed juice flows here, the markets really tend to follow this. And this 2011 crash was a really good example because we had the Fed pulling back and then we also had the astro events going on. But you can't, in this modern day and age, if the Fed is increasing the juice or they're in a really strong quantitative easing period, you're not going to get a crash. It just doesn't happen. So in the past, we never had to look at this, but now we do. So this is one of the first criteria that I look at. I don't really even look at the astro if the Fed is strong. And we know that the Fed is starting a taper right now. So in the way that I'm measuring it, the Fed has actually started this back in July. So this is a graph illustrating this. Now, this is a current graph here. This is going back to 2016 here. This is 2018. This was the taper tantrum when Powell starts to decrease here. He starts to cut back on the balance sheet, and then you can see the market goes into a stall. This one took 6 months. And then back here in COVID, they had a pullback here in 2020. Market took about 3 months. So the Fed pulls back. Eventually, the market does pull back and stall. And then right now, this current one took about 2.5 months. This is 2021. 2.5 months for this to show up. But we did start to see that show up now. The S&P is having some issues. We saw that first sell-off. It had a strong bounce, but now it looks like it's trying to turn back lower again. So let's look at some of the astro now. So I'm going to look at the Planetary Speed Index, and we're going to go back through some of these crashes. So I'm going to go back to 1929. Obviously, the Fed was not present here. I mean, they were here, but they weren't as powerful as they are now in terms of the operations. This is just a purely astro look at this. But what I'm going to do here is I'm going to show you a graph here. This is the 1929 crash. And this green line here, this is the Mercury station. This is when Mercury makes the station here. This is the actual crash here. It's harder to see because it's kind of stretched out, but this is a pretty dramatic drop in price. But you can see the Venus-Uranus is also present. They're very close to each other. And then you have your second Mercury station here, and then the Venus-Uranus is here right when the market starts to have that big down move. So these two guys always show up. And there's really no exceptions to this. I mean, there's one exception, the 2010 flash crash, but the Mercury was there. The Venus-Uranus wasn't. Now, I'm going to put the Planetary Speed Index on top of this, and it's going to make it look much more dramatic because you're going to be able to see what's going on here. So this is the 1929 crash, and this red graph here, this is the Planetary Speed Index here. So this is the Planetary Speed Index. I call it Planetary Speed Index raw. And you can see here that it peaks at the letter A here, and it starts to fall, okay? So the market actually goes up and makes a higher high, but you can see here that this is diverging lower this whole time. So even though the market goes up during this time like this, this Planetary Speed Index was falling, and then eventually it does start to fall. The market starts to fall here with the Planetary Speed Index. They both start to go down at the letter B. Now notice there's two interesting parts here. It comes back up here on the letter C for the next peak here. So this is setting up for the next drawdown. But notice the Venus-Uranus is right here, the 8th harmonic or the 4th harmonic, and then the Mercury station is also right there. So these two players show up with the Planetary Speed Index, and so the Planetary Speed Index falls, and then here comes the market falling with that. So you got to get all of these in concert working together, but when you do, the chances of a market crash are much higher.
Hey, we'll be right back with you, Shane.
Sure.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back with Shane Smoley and WolfTrader.com, and we have a question from one of our listeners. Which software do you use? Do you use Alfie Lavoie's Air software?
Oh yeah, this is Alfie's software. This is Market Trader Titanium. But these features are available. A lot of these features are available in the silver or the gold. But he has the best software. I think a lot of the financial astrologers that you have use this software in some shape or form with all the efficiency tests that you see. It all comes from Alfie's software. So he's kind of, like you said, the dean of astrology.
That's for sure. Go ahead, my friend. Continue, please.
Well, this is 1929. So again, on the letter D, you can see the Mercury station is here. And there's another peak on the Planetary Speed Index here. And then the Venus-Uranus is here. And you get the next really big dislocation. So sometimes this happens in a series of, it unfolds in a series of events. But you might say, well, that's 1929. What are some other examples? Well, let's look at 1987. 1987 is more closer to the modern era. So let's take a look here. Well, here you go. Here's 1987 market crash. This is the Dow Jones here in black. And you can see here's the Mercury station showing up right on top of that crash, right in the middle. And here's the Venus-Uranus showing up right in the middle of that. So these two guys are always together. They run together with these market crashes. But this is much more dramatic when you put the Planetary Speed Index on this, because you can see here once again that our market is following what's going on up in the sky. So here's the Planetary Speed Index here. You can see it's falling lower and lower. It's making these triple peaks here, and it's diverging lower. And then on this final peak here on the letter C, you can see it starts to fall, and then the market starts to fall. And the biggest dislocation comes right when these two guys show up again, the Mercury station and the Venus-Uranus hard aspect. And then again, there's another Mercury station over here where the market goes back up and then falls down again. So this is a pattern now that we're starting to see. And it's not just these crashes that I'm showing you. You go back through history and it's always there. So let's go a little bit closer now. Let's go to 2008. This is right before, this is the Lehman financial crisis, Bear Stearns, the whole, the Great Recession. So in 2008, here we go again. Same issue shows up again. You've got the S&P here falling, and you've got the Mercury station here. You've got the Venus-Uranus showing up, and then right after that, you get this big fall. And then on the second dip down here, you've got the Mercury station again. So same patterns showing up, different years, different decades, same energy shows up. Now I'm going to show you the Planetary Speed Index on top of this. First, I'm going to show you a broad-based picture. You can see here that the Planetary Speed Index is starting to show a broad, and this is 2008, by the way, to 2009, starting to show this broadening, weakening into here. But you can see the market generally follows the path of this. And then when the Planetary Speed Index hits its low into here, this is when you get this big dislocation into here, into the markets. So this is a big part of the market crash dynamic, because this particular event, you can go back way back in time, and it's always there. So if we put them together, you can see once again, here's the Mercury station here. Here's the Mercury station here. And right after that's the Venus-Uranus here. And it seems like right when that Venus-Uranus hits, that's when it really starts to show the big dips into here. So this, again, same pattern, different decades, same pattern shows up. We go into 2010. This is the flash crash now. So this is when the Fed was actually going with the quantitative easing. This was a period that was kind of in between what was going on with the Fed. In this particular case, the Planetary Speed Index falls here, market falls, and the Mercury station is within about 2 days. So you're talking about plus or minus 3 days here that this shows up again. So once again, different times, same outcome. Let's fast forward into COVID. This is 2020 now. So certainly this pattern can't be just showing up over and over again, right? I mean, this has to be random. People like to say that, but it's not random, because if we look at 2020 again here, here's your COVID crash, here's your Mercury station, here's the Venus-Uranus, and then this was the biggest dislocation here. And notice there was also a Mercury station right here at the beginning of COVID. So again, Mercury station by itself doesn't necessarily mean too much because it happens so often, but when it's together with the declining speed index, when it's together with the Venus-Uranus, now we're talking a potential crash situation. So let's go back here to COVID. So here's your 2020. So when you see this in the context of the Planetary Speed Index, it makes sense again. Here's the Planetary Speed Index high. Here's the Mercury station here. Market starts its fall with the Planetary Speed Index. You get another increase here. Here's your right shoulder again. Here's the next peak. Here's your Venus-Uranus. Here's the Mercury station. You get your next fall in the Planetary Speed Index. And of course, the market falls down. And we know that the Fed obviously stepped in here and got very strong. But again, these signatures show up over and over again. So this is something that is, these are consistent. There's literally no exceptions to this. The only one that might not occasionally be there is the Venus-Uranus. But this is something that shows up through the decades and through the years. And it doesn't matter how far back you go, it's always there. Now, there's another signature that I'm looking at, which is the Planetary Acceleration Index. And this measures the acceleration of the planets. This is the derivative of the speed or derivative of the velocity. So in 1929, let's see how the market behaved with the acceleration of the planets. Now, I'm including many planets in this. It's not just the inner planets. It's also the hypothetical Uranian planets. But you can see here, going back here to 1929, this is 1929 back here. And this is 1930 down here, and this is 1931, that the acceleration is falling here when the markets fall here. The acceleration rises, the markets rise, and then you get one more dip here in the acceleration, and then the markets follow it down into 1930. So again, this is just one particular set of years, but if this is affecting the markets, it should show up every time, right? So let's keep looking through history and see how this looks. So let's go past 1929. Let's go to 1987. And keep in mind, guys, this is not a back test. This is not a curve fit. This is just the planets doing their thing in the sky. And what's happening down here is affected by that. So, Larry, you talked a lot about how you think on CNBC one year there'll be a segment on this type of market forecasting. Yes. And I definitely agree with you. I think in 25 to 50 years, this is going to be mainstream information. There's no doubt in my mind.
50 years?
I think so. I think it's hard for.
That's way past my bucket list time limit. I'm talking 5 years, 10 years. Well, it's got to get done. So get out there and start beating the drum like you're doing on this.
Well, I'll keep. Look, I believe deeply in this, and I believe this will come to pass. It's hard for people to accept this, but you can see right in front of you that this is something that is a consistent pattern. 1987. Once again, let's take a look at this. Here's your planetary acceleration. The letter A here is the low in 1987. It comes up into B here, pulls back. The market comes up and pulls back. And then it comes up here for its final increase here at the letter D. And then the markets follow the Planetary Acceleration Index lower. Now, one of the things I will say about this is the acceleration is like you're moving and you're putting your foot on the gas. So when you have both of them together, the acceleration and the velocity, it's like you're in a car and you're speeding up. You're going faster and faster. So I believe this is why 1987 was so intense, because you had the velocity and the acceleration of the planets moving in the same direction. So it caused a sharper dislocation. If we look at 2008 here, you'll see a similar situation. You'll see a situation where the acceleration was also going down. So here, this is the letter A over here. This is 2007 here. This is right before it started collapsing, but you can see the Planetary Acceleration Index was falling. here into the letter B.
Okay, we got to
Sure.
stay with us, buddy. We've got to pay a few bills.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks, with Shane Smolian, WolfTrader.com, and we have a question from 2 of our den members. Is there a possibility to get a copy of this presentation, Shane?
A copy of the presentation. It's on YouTube if they want to check it out. I have a YouTube video of that online if they want to see that.
I think that's good enough. So YouTube will take care of it. Okay, great.
Yeah, you can
Please
go there
continue,
and see
my friend.
Sure. All right. So this was the 2008 crash here. And so you can see, once again, Planetary Speed Index falling, market falling. There's no exceptions to this. You go back through time, it shows up. Now, let's look at COVID. COVID was an interesting situation. Here's the situation here. The letter A, the Planetary Acceleration Index, was at a peak here. And then it was falling sharply here, even before COVID started here. This is COVID here, right here. This is when it started into here. But I showed you the Planetary Speed Index too. I showed you the Mercury Station. I showed you all of this stuff coincided. And I think because you had acceleration falling with this, I think this is why, once again, this was such a strong decline that's going on in the markets. So that's just a presentation that I did. I'll probably do another one this weekend on the Fed era market crashes. This is one of them, but there was a few dislocations here during the Fed era, and I think that's a little bit different. But the basic idea is the same, that these signatures show up, and if you want to understand broad-based market moves like this, big dislocations, you put the odds in your favor when you're taking this astro data. And again, I've said this before, don't get hung up on the planets. These are just like these are just hands on a clock. I mean, did the hands on the clock, is that time? That's not time. They're just representing time. They're measuring time. So don't get hung up on the planets. This is just a big clock, and we're looking at how all of these energies synchronize together. But if you want to get more information about this, you can head on over to wolftraderfutures.com, or you can contact me, Shane, at wolftraderfutures.com. I'll be more than happy to chat with you. I'll probably do another one this weekend on Fed-era market crashes, but you're more than happy to come and check it out. You get a 7-day trial.
Shane, thank you, my friend. Be safe out there.
Thanks, Larry. Thanks, everyone. Have a great week.
See you tomorrow, folks. May God bless.
Building wealth trading in the stock market seems impossible.